Okay, this is Coach Mike going to go over my focus group watch list video and the spreadsheet that I sent all of the members. Going to start out here, just go through our focus group watch list in alphabetical order, starting with Apple. I'm raising my hand as the first one that cannot believe Apple is where it is. And to be quite honest, you don't see a trade on there because I am not touching it up here. I'm scared to play puts, I'm scared to play calls. I need to see a little more before I do any type of swing trade on Apple in general. Over now to Caterpillar. Last week I put a couple trades on there and kind of made a little bit of an up move and then gave it all back. What I really want to see on Caterpillar is if it gets down to this 98.89 and what it does once it gets there. And, that might happen Monday, might happen Tuesday, might not ever happen. But if it does happen this week, I will make sure to send out to everybody a update to the focus group spreadsheet for a potential trade. And really, I think if Caterpillar is going to keep going up, we'll get a pullback close to that 98.89, close enough that we could use that as our support slash stop for a long trade. But I don't think you should take a short trade until it fails below it. I'm going to go over here to the weekly chart on Caterpillar, and the weekly chart kind of looks like we could have a potential to pull back, but I would actually need the entire week to really determine if that pullback has a good shot at happening. I think if the weekly closes below 99.49, then we could see that opportunity for a short trade. And at this point, I just kind of want to wait for that. Over to Chevron CVX. I talked last week on the video about how it looked like it hit this first target area and began to pull back, and we could see some continuation, which we did. And I brought up a potential puts play on 110 puts that if you got them, hey, if you got them early on Monday when it started pulling back, you're sitting good on those, no reason to sell. Moving over to the daily chart, though, on CVX, you'll see that Friday we actually went down to the prior low close point and had a green day. What I really want to see right now is if we hold 115.37 for a daily close or not. If so, that's kind of going to indicate to me that we might just be in a little bit of a consolidation pattern. And it's not that I'll avoid this thing in a consolidation pattern. It's that I might just still focus on the shorter term trades, trading options like for the following week's expiration, like I've been doing the last week or so since I identified, hey, it might just be in consolidation. To get into some potential there, I am seeing on CVX the potential with my 15-minute swing points on a W. If it closes a 15-minute above 116.66, I think that we could at least come up and retest the swing low point that was a triple bottom before. So, we could look at probably 117 or 118 calls for the following week with that as a target for the W. Otherwise, we've got to wait for a breakdown below 115.55 for a 15-minute close to trade the following week's 114 puts. So those are two trades on CVX that I'm looking at with potential depending on how we start out tomorrow. Facebook is still in this fairly tight consolidation range. And because of that, it's the probability of a big winner on a swing is a little low. I'd much rather wait for it to close a day above 75.76, at which time I would probably at that point take, at this point I think it'd be January $80 calls. And if it were to close a day below 73.88, I might look at the December 72.50 puts, even though it might not have very much downside. As far as the longer term swings, you can see right here on this chart, just sideways. Let's wait for a range break and trade direction according to the range break itself. Now, we were just talking about swing trades for Facebook, but let's look here at our 60-minute chart. We have a little double bottom here a potential of a W with a 60-minute close above 74.88. Where did it close at on Friday? 74.88. So if the first candle of the day on Monday moves upwards, any close on the 60-minute chart below 74.88 would be our stop, and we could look for at least just over a dollar move, I think, over to this area here, which would be 75.85. And again, if we break 77, we've got a big gap to fill. So watching that on Facebook for opportunity. Even though I'm a little leery to take a swing trade just yet, I might look at trading this W if we come out moving positive at the open. Last week, I talked about on the video a couple lotto trades, one of which was that puts trade based on the fall down to this 36.13 target. And the one thing I said would be a critical point was actually a weekly close below this 48.67. We closed at 48.49. So if it continues downwards on Monday, First Solar, it'd still be a little bit of a risky trade, but I think I would look at January $40 puts. And I don't have it listed on the spreadsheet because it would be a little bit risky. I want to go over to the daily chart though, and I want to show you. It did have a green day on Friday, but after this fall, it's not like it made up any type of big move. What I would really look for on First Solar is the potential that you might get a couple up days and get around to $50 to $52. And that's probably what I'd be more interested for as a new entry on a short trade. Otherwise, if it just keeps falling, you kind of got to take a risk and trade it smaller. Last week we talked about a potential trade on GLD. One thing I want to do if you did make that trade is I want to move our stop up to a daily close below 112.97. But I don't at this point in time want to recommend a new trade. Let me tell you why. We do kind of have this little bit of resistance point, 114.81, which it's almost at, is the prior swing low from the weekly. And here on our daily, we can see this gap fill at 115.19. So really, if you're going to look for a long entry in GLD, you kind of want to do it off of these highs, 112.97. If it did come back there and make a positive move, that could be a long entry point. Otherwise, you just kind of got to hold off for right now. For the better part of the last couple weeks, Goldman Sachs has been pretty flat. And we've talked a lot about what to look for on it to break down. Should it break down? And really, I think after this big of a run, the breakdown is what we got to watch. And still, we got to get a close of a day under 189.84. We still were unable to do that. Also, this line you see coming across the chart, which the value is 189.30, that's a weekly swing point from like 7 years ago that it barely managed to break above before consolidating. So, that's a point as a weekly swing point that could be a fairly decent support level. But if we get that break below there, we could see a few different trades that I would put out as alerts, but none of which I think I could put on the spreadsheet because I couldn't get the proper estimates for prices and whatnot right yet. So I just wanted you to understand for now what to be looking for, and that's really this breakdown out of consolidation. I do have one trade on the spreadsheet, which is for the 180 puts for the December monthlies, and it's really contingent on that breakdown below this line. So if we see that and you're not in a GS puts trade, that would be the first trade I would make while we kind of get an idea and figure out exactly what the chart's doing for us. For the last couple weeks, I've talked about the feeling I had that Lockheed Martin would pull back, but that it'd be a bit of a pain in the butt to play the pullback with puts. And I showed you a few points that I'd be looking for it to pull back to. Well, that hasn't changed. We've pulled back over the past couple weeks, and you can see by the sideways, pullback sideways, that it had been a bit of a pain in the butt to try to play with puts. I still want to wait for a long trade entry. I still think it could come down some more. I don't care what it does on any given individual day. I think in reality we're at least going to see, at the worst case scenario, for an entry 182.78, but I'd really like to see in this 180.31 area. So I'm still just waiting on Lockheed Martin. I don't want to play the puts. The past few puts plays, as you can see, you get a drop and sideways and a drop and a whole lot of sideways. It really isn't conducive to a high probability of a winning puts trade. So we just want to let that come back and wait for the long entry. UPS is another one. I said in last week's video we needed to wait for it to retest the swing point. We saw the tops that were made off of this line right here before pulling back and really just kind of making a double bottom. And throughout the week, what did we get? What looks to start being a pullback. I didn't want to play puts for that because the earnings numbers were really good. So obviously this thing could get some CNBC announcement or something and take off again. But I think we want to start watching this later in the week for a return around 105, maybe if we're really lucky, 104.50. And if we're really, really lucky, this gap to fill right here, I'd keep your eyes on it. And if we get down to that point, I'll be updating the spreadsheet with what I think could be a good trade there. And again, too, right now, the puts trades, even though you could have made some money on the puts trades, there's a difference in being able to make money and a higher probability of making money. And I just didn't see that on this one, so I'm not really going after it and attacking it in that way. And finally, over to Visa. Visa actually made a lower close on the daily of any day since it's been in this consolidation and since this double top. Technically, on the double top, your lowest close prior was 249.73, which it closed nearly $1 below that. That could actually be viewed as one of those M patterns where any close now above 249.73 would be a stop out on a puts play. I want to go over to the weekly chart really quick. This is the weekly chart that I've covered the past couple weeks. I put on there once it broke out that, we kind of missed the play. Didn't want to play that, but we wanted to watch for a retest of one of these 2 points. It just so happens that retest, will it happen? I can't guarantee you that. Nobody really knows. But the probabilities on these types of chart patterns is that it has a very high probability of retesting at least that higher swing point around that 232 area. And because that's such a big price to fall, I decided personally to play puts for that. But I included that puts play for the December 235 puts on the spreadsheet again this week, even though you could actually get them a little cheaper than I did because of the way the consolidation got me. I think that if we continue downwards, that's definitely a play you want to be in. I wanted to kind of take a minute. People know that starting December 1st, I'm going to start my focus group account over again and then work with everybody on building it up yet again. I also wanted to let you know that the next couple webinars that we do leading into December 1st is going to be specifically tailored to the focus group, the types of trading, teaching you the ways that I trade these charts and the way that I will be moving forward with my new focus group account when we start the 1st of December. So make sure you're available Tuesday nights, 7:30 p.m. Eastern Time for our normal weekly webinar that we do each and every week. There is a chance that I might have to reschedule this week's webinar. If so, I'll probably still do it this week, maybe just on Wednesday. And I'll let you know that probably Monday or Tuesday morning. There's a potential that I'll have a conflict in my schedule for something that might be unavoidable. But I sadly just don't know yet, and I'll let you know as soon as I do. Anyway, good luck with the upcoming week. Make sure you're joining us in the chat room as much as possible. And let's go make some money.